Good morning, everybody. So welcome to the second session of our webinar on the Financial Management Directorate's Manual for Staff. Last week, Tim went through the first two parts, Chapter 1, Strategic Planning and Budgeting, and Chapter 2, Accounting and Compliance. Today, he's going to go through Procedures and chapter, which is Chapter 3, and then he'll do Chapter 4, Financial Reporting. But before Tim starts, we had said last week that if there were any questions from the first session, which occurred to people after we closed off, we could take some questions before we start the Chapter 3 and Chapter 4 today. So are there any questions?
Let me intervene at this point and say that we received yesterday afternoon some comments, questions from the ministry, from the colleagues in the Ministry of Education and Ministry of Foreign Affairs, for which we thank them very much. I think there is one issue we need to clarify. The other two issues which were raised, it's more suggestions, recommendations. The issue which needs clarification, it has to do with how a clause in a circular is interpreted in the light of what is written in the manual, page 33 of the manual, which I think we can deal with that internally, because to tell you the truth, I didn't have time, we didn't have time to look at it. If there is a conflict, we can always, clarify it ourselves. So I don't think it's who is going to be doing what really. Which part of the FMD is going to be doing what. I don't think it should bother us it should bother us right now. The other comment which we received yesterday as well, but by talking to our colleagues during the last couple of weeks, it has to do with to what extent is this manual going to be implemented at this moment. And I would like to reassure them that the management, the accountant general, the deputy accountant general are fully aware of the fact that at this point in time, it cannot be fully implemented. For a start, and I think Tim is going to comment on this as well, we are not on accrual basis. So apparently we cannot implement that part right now. We don't have yet an ERP in place, which restricts us to a certain extent as well. On top of that, I have to say that, the next couple of weeks, by mid-July, the Accountant General will have meetings with all FMDs in order to plan our work for the next 6 months. And the request, of the Accountant General was that for the FMDs to plan their work, they should take account this manual which has been developed. So really it's up to the FMDs to come forward and say, with the resources we have, both human and technical, this is what we can do. And I would like to finish on this issue with a comment which I think Brian made, because we had the same question, the same consideration when this manual was firstly introduced to the FMD heads. And Brian said, I think, on that on this issue, that we are never going to find the optimum, the right time to implement it, to say that we are fully 100% ready. So since we have established these FMDs for 4 years now, and now we have this excellent manual, the guidance which is provided to us through this excellent guidance, I think we need to start utilizing it, having in mind that, yes, there are certain things which, because of lack of resources, we cannot do right now. This from me. Thank you very much. And I would like Brian's comment again on this issue, as well as Tim's, if they would like to comment on the right time starting using the manual. Thank you.
Well, in my opinion, I would just reiterate, there's never a perfect time. And in fact, I think that while you have a manual that can give you a framework and highlight the major issues, you learn so much from the experience of actually carrying out the role. That's where the real knowledge is gained. It's by actually, the application of the theory put it into practice, and that's when people really begin to learn. And I think that's the main thing. So I think you're right, Andreas. There's never a perfect time, and even though, how do I put it? As you said, you may not be in a position to do everything. There are certain things you can do which you can learn, and which will help people as they move along this journey anyway, towards the accruals. So people will learn as they go along. I think that's the way I see it. If Tim wants to comment, he's very welcome.
Thanks, Brian. You've probably just a couple of quick comments in relation to, I guess, the way the manual has been developed. As you said, there's no perfect time for implementing these things. And the way the manual has been developed is to enable it to be updated over time. So as either systems change or new reforms progress, the manual can be updated to reflect current practice. I think it is a practical guide to what FMDs should do. It's there to provide a consistent approach to the work of the FMDs across all of the ministries. So, I think it is a practical tool that can be used within each of the FMDs to guide their work. I think in relation to your first comment, Andreas, just around if there's a conflict between the manual and other guidance, I would probably observe that the manual is not authoritative in the same way that the legislation is, or the regulations or the circulars that are issued from time to time might be. But it provides a consistent approach to financial practices as modern finance functions operate in other ministries around the world. So it's really about getting that sort of consistent practice. If practices need to develop, if the manual needs to be amended, then it is designed to be able to accommodate that.
Yeah, thank you very much, Tim. It's good that, you're clarifying this. Both issues, that the manual has been developed in a way so it can be adjusted along the way. Plus, if there is a conflict, which I didn't really say there's a conflict, there is some clarification needed really. But even if there is a conflict with the circular, as you very rightly point out, it doesn't substitute. The manual is not a substitute for the circulars. The manual provides guidance how to implement modern financial management, and makes reference to the circulars. Yeah, fully agree with you. Thank you very much.
Okay. If that's it, I suppose we can start. Same as last week, that it's broken into two parts. Tim will do a presentation on one chapter. We then go to questions and answers, and we'll take a break part of the way through as well. And then we can go to chapter 4 and more questions, and then finish up. Just before I hand over to Tim, Natalia, do you want to add any comment today, or have you anything to say?
No, thank you. I'm good today. I'm happy to see everybody bright and shine very early in the morning for some. And let's listen to what Tim has to say today.
Thanks. So we hand over to you, Tim.
So I'll just try and share my screen. Then we have the slide deck. Okay, so hopefully everybody can see the slide deck satisfactorily. So as Brian outlined at the introduction, this is a continuation of the seminar from last week, which is really an introduction to the Financial Management Directorate's manual. This week, we're looking at the 2 chapters on procedures and systems and financial reporting. And we have time for questions and discussion at the end of each of those sections within the time slot. But before we go there, I thought I would just do a little recap on the FMD manual itself. And it goes a little bit to the conversation we were just having, that the FMD manual is intended to give FMDs an understanding of the scope of functions and highlight what the key activities are that need to be delivered. And then it provides a basis on which there can be a consistent approach to the delivery of those functions. The manual doesn't replace or replicate anything that might be in laws or regulations or circulars. It does provide a reference or a link to other relevant documents that can be looked at to help build out knowledge and understanding, but it is not a replacement at all for those things. The structure of the manual, again, I'll just do this very briefly. There is a foreword that just outlines the purpose and structure of the manual, as well as what the overall objectives are for improving financial management in Cyprus. Each of the chapters that align to the 4 main functions of the FMDs, so strategic planning and budgeting and accounting and compliance, we have dealt with last week, procedures and systems and financial reporting this week. And then there's a series of templates that support the activities that are outlined in each one of those chapters. Within each chapter, there is an introduction, which provides some of the context for that particular function and some of the background. It lists the main stakeholders involved, not necessarily all the stakeholders, but the main ones that have an interest in that particular function. It does list out the activities that need to be undertaken, and also provides reference documents, which can provide a useful source of information for activities that need to be completed in that particular area. Then within each chapter, there are a series of tables or fiches, as we've referred to them, which detail each activity and what needs to be done, how it should be done, the timing of when it should be done, as well as the area or the person that should be responsible for doing it. And it does make reference to the templates that are included as an appendix to the manual. And the seminar today, chapters 3 and chapters 4. Chapter 3 is one of the shorter chapters within the manual. That doesn't mean it's the easiest topic, but it just reflects the state of development and the diversity of who is involved in looking at the procedures and the systems used for financial management. Chapter 4 on financial reporting is probably one of the more substantial, and it's certainly the most visible aspect of FMD activities in relation to their roles. So chapter 3 on procedures and systems is really quite brief, and it deals with documenting and assessing financial controls in particular. As Andreas mentioned early on, things like the implementation of the new ERP system or financial management system will affect this function in particular. I would expect that as part of the implementation of that system, there will be quite a lot of work undertaken in terms of process mapping and documenting the controls that are required, which may well affect the activities that need to be undertaken in this chapter. So I would expect this is one of the chapters where some updates may be required once the development of the ERP system is further progressed. The other aspect that would affect this is the progressive implementation of accrual accounting, because there will be additional controls and processes that are required given the broader range of activities and transactions that are reported under accrual accounting. The reason we have a chapter on procedures and systems is really about how the internal control framework operates within Cyprus. For those that are not familiar with the internal control framework as terminology, it relates to both system and non-system processes that help mitigate risk in the processing of financial transactions, because it's really about when financial information is transacted and then reported, that users can have confidence that it is reliable information. There are two important elements in relation to the controls that operate. Firstly, that the controls are designed effectively. So that means that there's been some consideration of the risks that the control is trying to address, and ensuring that control points are included within the process flow to effectively guard against those risks. The second aspect is then around the operating effectiveness of those controls. I'm sure most of you will be familiar that it is one thing to have a control that has been designed effectively, and then it's another thing to make sure that that design is being implemented properly. And to enable that assessment to be made, it does require a periodic review of controls. There's a very strong link between the activities in this chapter on procedures and systems and the work that is done in the accounting and compliance function. So there would be an expectation that the two teams would work very closely together in relation to the outcomes or the outputs that they need to produce as outlined in the manual. So there are really only two main activities that are documented in this chapter. The first one is around understanding the internal control context. This means understanding the operations of the ministry and how it undertakes its financial activities. To enable that to occur, we'll talk a little bit about looking at background documents, how any issues or concerns might be identified, and also about maintaining the knowledge of FMD staff on what a contemporary approaches to internal control look like. The second main activity is around documenting and assessing financial controls. And we talk a little bit about just how to map financial processes, how to ensure that the financial processes are being undertaken appropriately through a process called walkthroughs. And then if there are any issues or risks, then working out how to remediate those particular risks is something we can talk about. So in relation to the first group of activities under understanding the internal control context, and you will be familiar with reviewing background documents from the chapter on strategic planning and budgeting. The background documents we're referring to in this chapter are really around the detailed process flows and process maps that might have been developed. If they don't already exist, then we'll cover that under the documenting the financial controls. But where documents do exist, it's always a good idea to have a look at those documents to understand how a process should be operating and what the original design of that particular process might have been. I think with the ERP implementation occurring, they will have a whole range of design documents, including process flows, particularly for things like accounts payable and accounts receivable. So any documents that are being prepared as part of the FMIS design process will be very useful in terms of getting an understanding and a background to the processes that currently exist. One of the key activities that the FMDs will need to consider as part of this function is being able to identify any issues or concerns with existing processes and systems. This will deal with any gaps or any emerging risks that might occur. To be able to identify those, working closely with the accounting and compliance team will be quite important. They will be the ones that are processing individual transactions, and they will usually have quite good knowledge on any gaps or exposures that they might see as part of that processing activity. The other area that often provides a good source of information in relation to issues or risks is internal audit. And if internal audit have undertaken any reviews of particularly financial processes over the course of the previous, say, 12 months, looking at what they have found and what they've recommended can provide a wealth of information in relation to risks that might exist and their thoughts on how those risks might be remediated. Similarly, any reports on the ministry by the Auditor General, either as part of financial reporting audits or performance audits, can provide useful information in relation to any risk exposures that might exist. So being able to identify those and then to identify appropriate remediation activities is fundamental. One of the things that we do talk about in this chapter is taking a risk-based approach to financial controls. So that means assessing the materiality of the risk, or the significance of the risk and the significance of the exposure in designing controls. It's not only that controls need to be in place, but they need to make sure that they do not impede the delivery of activities for the ministry. So it's quite important that controls, when they're designed, there's not an approach that over controls a particular transaction or a particular risk. The controls need to be appropriate to the size of the risk that's being managed. Lastly, the contemporary approaches to internal control. Risk management is fundamental here. The other part that is important is understanding how modern ERP systems and financial management systems operate, and using those systems to best advantage and some of the inherent controls that exist within those systems can help in the design of controls. So this means that people need to be cognizant of any training and development that might be needed in the internal control domain, and making sure that any activities that are undertaken reflect current approaches to financial processes and financial control. I might just mute myself for a moment. I just need to have a quick drink. Okay, the second group of main activities under procedures and systems is around documenting and assessing the financial controls. This partly presumes that when a process is first being documented, that there is no existing documentation. But if there is, periodically, it is a good idea to make sure that the process as documented is in fact the process as it operates. Importantly, as part of this process, it's not about documenting every single financial process that might exist within the ministry, but selecting the key processes that are fundamental to providing some level of comfort that the information that is being reported is reliable, and that financial transactions as they are processed reflect the activities of the ministry. I'm sure many of you will be familiar with process flowcharts and the like. Mapping key financial processes is really about following that logical path, documenting it in a flowchart, supporting the flowchart with descriptive text that describes the particular activity or the particular control that might be in existence in that particular process. Importantly, when mapping financial processes, it's quite important to identify what the key controls are that are actually operating within that particular process, and can provide a useful reference point when auditors are looking at a particular process, or when the accounting and compliance team or the procedures and systems team are looking at what are the key controls, which controls need to be in place to manage the risk, and which controls might be able to be removed because they don't provide an important mitigation to a particular risk. Once financial processes have been documented, it's always a good idea to conduct what's called a walkthrough of those processes. This is where, once the process has been documented, you talk with or sit down with the staff that actually undertake that particular transaction and confirm that the day-to-day activities that they undertake actually align with the process as documented. This is quite an important element because it goes to the operating effectiveness of controls. As I mentioned earlier, the design of control is one thing. Operating effectiveness starts with an assumption that people are following that process as documented, and a walkthrough is a good way of establishing whether that is the case or not. The other way of looking at it is to actually track a transaction that has been fully processed backwards through the process and to confirm that the various controls have been executed appropriately in that particular transaction. Once those two activities have been completed, it provides an opportunity to identify any gaps in controls. If there are any gaps or emerging risks that have been identified, it's really around developing proposals on how to address those gaps and to make sure that any remediation is appropriate to the size of the risk that is being addressed. Once the resolution or the remediation has been identified, it's a matter of seeking approval for that and then to proceed with implementation. One of the important parts through all of this is collaboration and consultation with other areas. As I mentioned, the accounting and compliance team will have significant knowledge and a significant interest in the activities that are undertaken here, as will the team that manages the ERP system or the financial management system, given that many financial controls actually exist within a financial system. So maintaining good relationships and close collaboration with them is important in identifying any gaps, as well as developing proposals to address any particular risks. There is a template that supports this chapter, and it's really, it's called Financial Controls Identification Worksheet. And it is really just a worksheet that enables the listing of what the controls are and how those particular controls operate in practice. And that is the only template that is available as part of this chapter. So as I said, this is one of the shorter chapters within the manual. We can have some discussion or questions now in relation to this chapter. So if anyone has any comments, if you could put them into the chat function, or we can just raise your hand and turn on your microphone. So if I pass back to you, perhaps Andreas and Brian, just to stimulate some questions before we move on.
Yeah, I mean, if there are any questions from the colleagues, I think it's the right time to put forward. In the meantime, just 2 comments. Well, after, of course, thanking the team once again for a very clear and coherent presentation of this section. Procedures and systems, as rightly pointed out, it's a section of the manual which will need to be adjusted because of the ERP once that system is implemented. But it's good to bear in mind that there are systems, I mean, the financial systems which, or processes, rather say processes, which today they are implemented with systems, financial systems, which they are not going to be part of the ERP. So what we have discussed is very relevant, I mean, especially to those systems, which they're not going to be part of the more robust, if I could describe it, ERP. And the other comment is that I think it was back 2 or 3 years ago, once this, after these FMDs were formed, that we ran a seminar, a 2-day, if I remember correctly, seminar for the colleagues who were assigned these role systems and procedure systems, exactly in order to familiarize them with these ideas, like walk-through tests and documenting processes. And it's something which we acknowledge has to be repeated again because people have changed roles or they have been transferred. This is from me as a general comments. Once again, thank you very much, team. And any questions from the colleagues, mostly welcome.
I think Philip has a comment.
Good morning, everybody. Thank you for the presentation. I wanted to ask regarding the procedures and the systems. In order to be able to perform such a review of systems and procedures, you need a specific skill set and mindset. So I wonder if there is a reference regarding the capacities that people should have in order to be able to execute this role efficiently and effectively. And the second question has to do with the discrimination of this role with the internal audit role. What would you say the barriers are? Thank you.
Thanks, Philippos. In relation to your first point around the capabilities or the capacities that are required for someone to do this, there's probably a few skills that are important. So I'll sort of leave aside the professional disciplines, so whether it's accounting or IT or law, for example, that people might have. One of the key capabilities is around business analysis and actually documenting a business flow. And typically, you know, IT design, for example, or system design are quite good at that. So you don't necessarily need to have accounting skills or qualifications, but you do need to have a business analytical approach to this particular activity. Risk management is another important element within this. So understanding risk management practices, how to assess risks, how to assess likelihood, how to assess impact are quite important in relation to this particular function, because it is about taking an appropriate approach to financial control rather than trying to control every single risk that might exist in relation to a transaction, because some risks might be insignificant to the overall outcome. In relation to whether you call it an overlap with internal audit or not, typically internal audit and audit generally will look at the effectiveness of controls as they operate. They generally won't advise you on how to design a particular process. So what they will usually say is, well, management that's responsible for a particular area, you might have a risk that you need to address, and it's up to management to identify how they're going to address that risk. Internal audit will typically come along afterwards and review whether that approach has been effective. Last week, we talked a little bit about the 3 lines of defence in the internal control framework. So the first line is about the day-to-day activities undertaken by staff in management roles and in processing roles. The second line of defence is where FMDs fit in particular, which is around having some compliance monitoring and support for the first line of defence. And internal audit fits into the third line of defence, which is really about checking the effectiveness of the operation of those controls. So there is a distinction between the work that the procedures and systems team need to do, because that relates to the development of any particular process to address a particular risk, whereas internal audit is about reviewing what management has put in place. I'm not sure whether, Brian, you wanted to add anything to that?
No, I've actually nothing to add. I think you've summarised everything there. Just a trivial point. Well, I will add something now that I think about it. It was just when you mentioned about when you were speaking about risk management, when you highlighted it in one of the slides, and now when you've mentioned it again, I think it's a very challenging area to get right. We constantly see examples of where risk management has gone wrong because a risk was underestimated or underprovided for. But it is also the wrong thing to do to try to account for every single risk, no matter how trivial or no matter how low the likelihood of the likelihood of it occurring is. And I've seen that that mistake being made, where particularly when there's reforms going on or where there's new procedures being put in place, that management try to account for every single risk, and it becomes a bureaucratic exercise that can't be managed. So I think it's a very difficult area to get exactly right. And I wouldn't be discouraged if people made mistakes or whatever, that kind of thing. But that's really all I want to add to what you said, Tim. Is there anything else?
Tim, thank you for the response. Do we have this, especially the skill set that you have described about risk management and the other things that somebody needs to be aware of before doing this exercise? Do we have them in writing? Is this part of the manual, or because if it is not, it is good if we have it as a reference.
Thanks, Philip. I think Brian might need you to come in on this. So there's a couple of things. One is there are role descriptions that have been developed.
A list of things, yes.
Yes, that have been developed for the main roles within FMDs. So that will be one area that identifies some of these particular capabilities. The other one was the training needs analysis and the change management strategy that was developed. That probably goes to some of these, but Brian, are you able to comment on those?
I think that's really it, that we've developed training needs assessment, and we've also done the role descriptions of the key players in the FMD. So that should actually go some way towards addressing Philippos' his concerns there about the about guidance for what people should be able to do. But again, I'd go back to what I said earlier. You have guidance, you have a manual, you have role descriptions. There's no substitution for the actual experience of carrying it out.
Okay.
And if I may add, I mean, to this conversation, one skill which was identified as absolutely essential for this role is for people to understand how to document, how to check systems. Yeah, seminar was organized back in 2017, if I remember correctly. Of course, as Brian rightly said, training needs analysis model has been developed. So through the implementation of has been developed, these skills can be identified and train people. But again, these skills, I believe, they can be developed mostly through experience. And one last comment on another issue, but something which Brian said, is about the assessment of risks. Yeah, I mean, I have noticed this many times in my career as well as a civil servant, that there is a tendency, and I don't know if it's the same in the private sector, I think it's more a phenomenon we see in the public service. There is a tendency to address every little risk, and we end up with bureaucratic procedures. And at the end of the day, this hinders the business of ministries or departments. And this, to a certain extent, creates, if I may use the word, friction between financial people and people of the ministry. So yeah, we should be extremely careful with risk assessment. Don't underestimate the risks, but again, do not overestimate them when assessing systems and procedures.
Anything else? Shall we take the break now then, Andreas?
Yeah, I think if we don't have any other questions or comments, I think, yeah, we can have our 5-minute break, Tim. Is that okay with you?
Yep, that's fine. So
Well,
I have 4:47. So if we resume at 52, whatever it is, 9:52 or 10:52.
53 now, 53.
Shall we make it
53.
55, round it off, 55?
Yeah.
Okay, yep, sounds good.
All right.
Lovely, okay. See you. I'm on this side of the world.
Very good, thanks, Andreas. So the last chapter we're going to look at, chapter 4 on financial reporting. And financial reporting is really one of the most visible aspects of financial management. This chapter actually deals with the processes for producing budget and financial reports. Now in Cyprus, similar to many other countries, there are 2 bases of accounting that are used, which means the reports are slightly different. So there are budget execution reports that are prepared using the cash basis of accounting. And then there are financial reports which are prepared using the accrual basis or modified accrual basis of accounting. In the financial reporting process, there are some activities that are common to both types of reports, and there are some activities that are unique to particular, whether it's the cash basis or the accrual basis. As we mentioned earlier, some of the activities that are detailed in this chapter are not yet ready to be implemented. There is a dependency on the accrual accounting project and how that progresses. Although not on this slide, there is also a very close relationship to the new ERP system and the reports that will be available from it that will support financial reporting. So within financial reporting, there are three main groups of activities that we have documented. The first one around annual planning and engagement. And in many ways, this is a typical planning process for any activity where you identify what's needed, document the tasks that are required, the timeframes that are required, and also make sure that you understand what the stakeholder requirements are. So we'll talk a little bit about to the annual planning and engagement activity. The second main group of activity we refer to as closing the books. Now, closing the books is a fairly common phrase that's used particularly with financial management systems in relation to the tasks that are undertaken to close off an accounting period. And it's only once those tasks have been completed that financial reports should and can be relied on. So we look a little bit at what the processes are for the cash basis of reporting and what additional tasks are required for the accrual basis of reporting. The last group of activities is the actual production or the preparation of the reports themselves. And there are three main groups of reports that we talk about. There is the monthly budget execution reporting done on a cash basis. There is the quarterly budget reporting also done on a cash basis. And then there are the 6 monthly management accounts that are prepared on an accrual basis. And we talk a little bit about some of the aspects of preparing and presenting each one of those. So in relation to planning the close the books process, fundamental to this, as it is with almost all activities in FMDs, is meeting with key stakeholders on what their needs are, what challenges and issues they might have in relation to managing their the finances for which they are responsible. So talking with responsible officers, controlling officers, the FMIS administration team, and anyone else that might have responsibilities in relation to financial management. It's important to meet with them to gain an understanding of their particular perspective on the close the books and financial reporting process. This enables the identification of any particular needs that they might have, an understanding of what those needs are, and how the financial reporting process can support the satisfaction of those particular needs. So fundamental, the relationship between FMD staff and in particular the financial reporting team with those with responsibilities for financial reporting is fundamental. As I just mentioned, the FMIS team, given the automation or the implementation of financial management systems and their prevalence in financial management, understanding what the system requirements and the system processing requirements are is fundamental to actually planning the close the books process. So how particular ledgers might be closed off, how other modules might be closed with old periods closed and new periods opened is fundamental to actually establishing the plan and setting the timeframes for when those particular activities needs to occur. Certainly it's been my experience early on in my career with financial management systems where the systems team would undertake processing activities without working closely with the financial reporting area. And as a consequence, transactions would be backdated, which means reports would change. And if you want to instill confidence in people that use those reports that the information that's presented is reliable. It's important that everybody understands the timeframes for when different accounting periods will be opened and closed, and when particular system processes will be run. And then once that is documented and understood, everybody can work off the same plan. Once the plan has been developed and the key dates documented, it's important that the plan is then circulated or made available to relevant stakeholders. And that way people can have an understanding of what to expect at particular points in time. One of the templates that has been provided that we'll talk about is the detailed financial calendar, and when particular activities will be completed and when reports will be available for people to use. In relation to the engaging with stakeholders component, the annual planning and engagement, as you'd probably expect, needs to occur before the commencement of the financial year. And it's important that FMDs meet with not just permanent secretaries, responsible officers and controlling officers, but with any other stakeholders that have an interest in and potentially a use of financial information. It's important as part of that conversation to understand what their information needs might be and the frequency with which they might want that information. This enables any gaps in data or gaps in reports to be identified so that new reports can then be developed that might satisfy those particular information needs. One of the, I guess, founding precepts of financial reporting is making sure that financial reports meet the needs of the users, so the people that receive them and need to act on the information that's presented within them. Once the discussions or the meetings have been held with stakeholders, if there are any changes that need to be made to reporting templates or the like, those changes need to be documented, they need to be approved, and then they need to be implemented. And this is where some of these activities will overlap with the procedures and systems activities, because financial reporting is one of the key financial processes that needs to be documented and then implemented. And like all processes, it's important that they're not just done based on a single conversation, but they are actually put through a fairly rigorous process to assess what the change is and to make sure that it's approved at the appropriate level. In relation to the close the books process, and particularly the cash basis of reporting, there is a checklist that is provided as one of the templates at the end of this chapter. It does outline the key tasks. Now, one of the things I would point out at this point is the key tasks in that template have been developed based on experience with financial systems and financial reporting processes in other jurisdictions. It may need to be updated to reflect the particular circumstances in Cyprus. So current state of the financial management system or progress with the ERP or accrual accounting, those key tasks or that template may need to be updated to reflect those activities. And certainly as the reform program progresses, I would expect that template is updated quite substantially. The other important aspect of templates, it's one thing to have a list of things to do. It's another thing to make sure that those things are being done and being done appropriately in the appropriate time frame. So one of the key roles of FMDs is to not just execute the tasks. It's for management within FMDs to monitor that the progress is being made in accordance with the plan. One of the important activities in the close the books process is around adjusting journal entries. The manual does not talk about when it's appropriate to do it, but it does provide guidance that if there are journals that need to be processed to either correct errors, to reallocate miscodings against the chart of accounts, there is a mechanism to do that, and certainly seeking appropriate levels of approval before they are processed is important. One of the important elements that we have covered off in the manual is to consider the materiality of any adjustment before processing it. So one of the things you will find in producing financial reports, particularly if they need to be produced fairly quickly after the end of the month, is you will not have time to process every single adjustment if you go down and adjust them back down to €1, for example. So looking at what is a material adjustment, and materiality, certainly in financial accounting, is often looked at as 5% of a particular base amount. And it may be that those adjustments are not processed at the end of the current period. They might be only adjusted on, say, a quarterly basis, for example. But it is important, like we talked about in procedures and systems, around assessing the risk. In relation to financial reporting, it's assessing how material is this adjustment to any decisions that might be made based on the information that's presented. So making sure that that is considered as part of any adjusting journal processing is quite important. The other aspect that's important, whether accrual accounting or cash accounting is used, is reconciling particular accounts and making sure that the reconciliations are completed on a timely basis. Reconciliations are one of the key controls that are used in relation to financial reporting, and it enables any adjustments that need to be made to be dealt with promptly, and that you don't get any surprises or have items for which there is no explanation existing in accounts. So making sure that those reconciliations are completed in a timely fashion, and then if there are adjustments or reconciling items that need to be cleared, that they are cleared in a timely fashion. In relation to some of the additional activities that are required for the accrual basis of reporting, and this will particularly apply to the 6 monthly management accounts, which is when we start seeing some of the asset and liability balances being included. Some of these are relevant even under the cash basis of accounting, but only as they affect either revenue or expenditure. So things like accounts payable, making sure that all invoices have been properly recorded in the correct period is one of the important checks that needs to be done under accrual accounting. Similarly with accounts receivable, it's not just making sure that the accounts receivable have been included and invoices issued, but any overdue amounts have appropriate follow-up action that's taken. The other area that's quite important is around asset acquisitions, and whether assets are being acquired through a project or just through a normal purchase arrangement, making sure that any assets that have been acquired in the period have been identified and then properly recorded in the appropriate asset register. And even though we've listed that as part of the accrual basis of reporting, some of those activities are quite important even in relation to cash basis of reporting. The other element that's quite important is around major projects. Now, major projects have a couple of aspects that are important. One is just making sure that expenditure is recorded appropriately in the correct period, but also that any assets that get commissioned into service as that project delivers are identified and recorded in the asset register. The other aspect that's quite important as part of that is making sure that if there are variances, the variances are understood, and we'll talk a little bit about that as part of the preparation of financial reports. On the liability side of the balance sheet, we've listed out some of the common liability types, such as provisions, and what we mean there is provisions for employee entitlements, for example, which is the accrued leave that employees might have. If there are any investments that might be held by the the ministry, and any other accruals or other assets and liabilities that might exist for that particular area, reviewing those, checking with the relevant area that's responsible. So for example, if it is employee leave provisions, checking with the human resources area to make sure that if there are changes that are needed, they can be identified, and then any journals to reflect that change are processed appropriately. Importantly, if there are any changes that are required to those particular balances, it's important that they are documented and approved by an appropriate officer, and that it's not just processed based on the advice of a particular individual. Any adjustment that is recorded in a financial system does need to be properly documented and have supporting evidence on why the particular adjustment is being made. In relation to the preparation and then the presentation of the monthly budget report, the high-level activities that are documented in the manual is really around when the report is first produced, and I understand the report will be produced directly from the financial management system, is to look at the report for reasonableness. Now, to enable that to occur, and this is where some of the linkages to the other chapters and the other functions become quite important, that you need to have an understanding of the ministry, its programs and activities or services, to be able to assess whether the financial performance in the particular month or the period is reasonable. Some of the ways that can be done is comparing the budget or comparing to the same period for the previous year, but looking at it, and then if there are anomalous amounts that are included in the report, investigating those is really the first activity in the monthly reporting process. One of the purposes of producing financial reports is to actually provide a basis to analyse performance. So looking at what the key budget indicators might be, so performance against the budget for particular programs or services, being able to identify the cause of the variance. One of the common difficulties with analysing financial performance is people will often say that the actual performance for the period is different because the budget was wrong, for example, or they just say, you know, the actuals were different by 100 euros or 10% or whatever it might have been, but that does not explain the actual cause of the variance. Trying to identify the cause of the variance, which could be, you know, there were fewer students enrolled in something, or there was less fuel consumed because there was less travelling in a particular period. The analysis that needs to be done really needs to look behind the numbers and provide an explanation on the underlying cause of the variance. Once that has been done, it actually provides a basis to enable any forecasts for the full year to be updated if necessary. Again, documenting the cause of the variance, and then seeking approval if forecasts need to be updated should be undertaken as part of that. The last activity with the preparation, the presentation of financial reports is really meeting with those with key financial management responsibilities. So for example, the permanent secretary or the responsible officers or controlling officers to discuss the results. One of the important elements here is that it's the key issues arising from the analysis that need to be discussed, not every variation that might exist in the financial report. And this is where really the underlying cause of the variance against budget becomes quite important, because that needs to form the basis of the discussion, and whether any corrective action or remedial action might need to be taken to get performance back on budget. And that activity applies in all financial reports that are produced. Similarly, with the quarterly budget report, Again, the reports should come directly from the financial management system, undertaking the analysis and explaining variances. One of the things that we do talk about here is using thresholds as part of that variance analysis. What we mean by that is only focusing on variances that might exceed a certain percentage variation against budget or a certain absolute currency amount against the budget. And this can streamline the variance analysis process. If you try and analyse every variance, you'll often find it challenging to meet the timeframes that have been set. So setting thresholds can then direct activity to the higher value variations to be explained, and the lower value variations can either not be reported or they can be followed up subsequent to the report being distributed. Again, distributing the report to relevant stakeholders, so making sure that the report that goes out is understandable, it's got clear variance explanations, that people are getting the information in the manner in which they can understand it. And this sort of links back to the planning process and the engagement with stakeholders, that if you understand what their requirements are, you're better able to produce reports and provide it to them in a manner that's suitable to their needs. And again, meeting with relevant people, and again, highlighting what the key issues are that are arising from the analysis of that report. So rather than just presenting numbers to senior people in particular, it's presenting the numbers and also highlighting what the key issues are, where they may need to get further information or where they may need to take some form of corrective action to deal with it. The 6 monthly management accounts report, again, fairly similar. I guess some of the main differences here is guidance issued by the Treasury in relation to the preparation of those reports and making sure that the reports that are prepared are developed consistent with that guidance that comes out. Again, reviewing and updating the significant asset and liability balances, as we talked about in the close the books process. And it's just making sure that the relevant areas that are responsible for those particular assets and liabilities have been involved in that review and any update that might be necessary. The analysis and explanation of variances for the 6 monthly management accounts is a little bit different to what is done for the monthly and quarterly reports. Given that the management accounts are prepared on an accrual basis, it's really about analysing the performance for the end of the current 6 month period against the amounts that have been reported for the previous 6 monthly report or the previous annual report that has been prepared. Again, using thresholds to focus on only the material variances is quite important to manage the workload that is associated with that. And again, documenting any analysis, highlighting the key issues for discussion with senior management is really the value add that FMDs and the financial reporting function provides, so that people are not looking at numbers and then trying to work out why a variance might exist in their own time. It's basically provided to them as a package of information. Now, there's quite a number of templates that are provided for this chapter, given that financial reporting, as I said before, is one of the most visible aspects of financial management. There is a financial calendar, so it does provide details of when key bits of information or key reports will be issued, as well as the key processes and tasks that need to be undertaken. We do suggest that that financial calendar is made available broadly so that people can understand what to expect from FMDs and the timeframes in which they can expect it. The second template is the key task list. And as I mentioned, as the accrual accounting and ERP projects progress, we would expect that key task list to be amended and enhanced, but it provides a starting point in relation to the activities that need to be undertaken. Templates 3 and 4 are really around reconciliations and making sure that they're completed in a standard and consistent manner, and then making sure that reconciliations are reviewed. So it's not just that the reconciliation is done, but that they do need to be reviewed by somebody independent to verify that the work has been done appropriately and accurately. Then the last 3 templates, so templates 5, 6, and 7, really provide a little bit more process description in relation to the quarterly budget report and the format of the quarterly budget report, as well as the key tasks and the structure of the 6-monthly management accounts report. Now, that may well be affected by guidance that is issued by Treasury, but as I mentioned earlier, the templates and the manual's been designed that they can be updated to reflect any changes as they are made. So that is the last slide. So we now have time for questions and discussion on financial reporting, or any of the other chapters if people have questions that have occurred to them that they would like to go back and talk about now. I might pass back to you, Brian and Andreas. We can have some questions.
You can stop sharing the screen, I think. Oh, and Andreas, if you want to make a comment, go ahead. But I see Philippos has his hand raised. He has a point to make or a question to ask anyway.
Yeah, okay, so let us go to Philippos then. And
yeah.
Thank you for the presentation, team. Thank you, Brian. It's not a question, it's rather a suggestion to the colleagues that people should communicate with management and secretary generals and department heads to identify their reporting needs in order to be able to provide the reports in the format or in the form that it will be useful to them. However, it is my understanding, and I believe that our management in the public service, it's not used to asking for reporting details or reporting types. So it would be necessary for our to propose reports or trial and error in the reporting to the management, because we can provide them information they don't know they can have. So it is important for our people to understand that they need to go beyond just asking them and trying to identify what they need. They have to identify themselves what would be useful to them in order to propose it as a report, demonstrate it, and if necessary, keep it, or if not, try something else.
I think that's an excellent point, Philippos. It reminds me of a comedy skit I saw at one point, which is somebody was asking for something and they couldn't actually define what they wanted. So it was, what do you want? And the response was, well, what have you got? And I think the development of financial reports fits into that category, that FMDs may need to produce something in the first instance to be able to get a response and saying, well, this is the type of information we can provide. Does it meet your requirements or not? And then start the discussion with something on the table rather than starting the discussion with a blank sheet of paper.
If I may add to the discussion, and just take a step backwards. The message, the big message, which I think comes out of these presentations, is that, yeah, we need to understand the business of the ministries and the business needs of the managers that we need to serve in order to be able to perform the role we dream of, the role we should be playing. This is what's going to change what we have been doing for so many years to what we should be doing and what modern financial management functions carry out. Thank you.
Philippos, your hand is still raised. Do you wish to speak again? Oh, okay.
Okay, if we don't have any other comments or questions, I suppose we need to thank team very much, the OECD team, Brian himself, Delphine, who was here with us before Brian joined, the rest of the team. Of course, the EU Commission, specifically Natalia, for financing this project and making it really happen. Special thanks, of course, have to go out to our colleagues here for the very constructive comments they provided to us and the OECD teams during the development of this manual. Of course, the colleagues who attended these seminars, and hopefully they will find this manual a useful tool in their work, and they will use it, which I'm sure they will do. We need to stress again what has been said a couple of times today, that this is a live document. So this goes out to our colleagues again. If you feel that something has to be adjusted when this manual is put into practice, please let us know so we can discuss suggestions, recommendations. Of course, our thanks, my thanks have to go to Spiros for his very vital role played in the development of this manual, coordinating everybody and organizing everything. And last but not least, once again, I need to thank Deborah. I'm sure Brian will do it for organizing this seminar so effectively. And I have to say on air as well that we received already the recordings of last week's seminar, which is of excellent quality, and it will be uploaded on our intranet, so colleagues can have the opportunity to see it over again, or if they didn't have the chance to watch these seminars, now they can do. This from me, and once again, thank you very much.
Thanks, Andreas. For me, obviously, I have to thank everyone for participating today. Thanks for Tim for another excellent presentation, and of course to Deborah for organising it. And I'd also like to thank Spiros, Philippos and Andreas in particular for your cooperation and the great relationship we've had with you over the last period of time, which has really gone back before my time to join, gone back to Delphine's time. So it's more or less been for the last 2 years. thanks very much as well, of course, to Natalia, who's been a big help to me. Because when I came into this part of the OECD, I didn't know about some of the rules and regulations, so she's been very helpful. The other thing I want to say in particular as well is, not just for today, Tim has been outstanding in his contribution and his work. Delphine told me when I joined, she said, don't worry about anything. Tim is fantastic and he'll deal with so many things. So I want to put that on record, Tim, that I'm very grateful to you for your output and also for your flexibility. So thank you. We continue with some of the work. We have still to finalize the manager's manual for the line ministries and deputy ministries. But we're working towards that, and everything seems to be going very successfully. To go back earlier on to what Tim mentioned about the role descriptions and the training needs assessments, let's not forget about them either. They were developed by other colleagues in the OECD. So we did develop, suggested organizational structures and job profiles for financial management units and relevant stakeholders in the line ministries, and with the training needs assessments, which mapped out the required competencies and identified the existing gaps, etc. So that's more or less, I think, all I have to say. And I would like to ask Natalia to make her closing remarks today, if she wouldn't mind.
Sorry, Brian, can you repeat? Because I was switching the...
Would you just mind finishing up for us? Just to say the last, just even to say goodbye.
Thank you very much. I suppose I can join everybody in thanking the excellent work that has been done on this manual, which was part of a larger project, which is part of a larger reform that is still ongoing and it will still continue for the next several years. I think I will not go to mention anybody by name, but just to say that a lot of excellent work has been done by the OECD colleagues and by the Cypriot colleagues and some of the people that have remained in the shadows, but without which the project couldn't have been performed. And just to stress that we'll look forward to see the continuation of this reform and the implementation of the FMD manuals and the implementation of all the other manuals that will continue to be developed by our colleagues in the Treasury, with or without the support of OECD, with or without the support of the European Commission. But I would actually be very curious to see how this all continues. And I wish everybody a good work in continuation, and see you all soon in Cyprus.
Thank you. So
Thank you.
I think that's it. Okay.
Okay, from us as well. And thanks again.
Thanks, Brian.
Bye.
Thanks,
Great.
everybody.
Bye, everybody.
Thank you. Okay.